All right, traders, tomorrow's going to be the last trading day of the week. Fridays are known for being my best trading days, and what we're going to do is we're going to continue to prepare you to trade the best setups at the best prices so you can consistently make money within the stock market. I'm going to be sharing with you our newly updated key levels on where we're interested in buying calls for the dip and where we're interested in shorting the rip by buying put options. I'm going to show you on how we're planning to profit both ways heading into the last trading day of the week. In terms of today, I did start off up nicely on put options. Then I swayed away from puts and I was buying calls at terrible resistance levels, thinking it would bounce off the dip. And I lost multiple times doing that in a row, walked away. Then I had a nice trade on calls right before the market closed. It exploded in terms of the call options with that nice rip with the zero dates. But regardless to say, today was a red day and I am down nearly $5,000 on the day. I'll be sharing with you the mistakes that I ended up making and what I could have done better and tips and tricks towards the end of this video. We're going to start off hot with the trading plan for tomorrow. So in terms of our overall video, we have been discussing very clearly in terms of put options and shorting the SPY within a bull market. One of the best ways to play that is to do two things. Focus on resistance levels on the daily chart that have not been tested. And if you study the daily chart, you can visually see the next resistance level was 458. That was the major resistance where SPY kept selling off, bulls kept getting trapped at 458. Then we made it very clear if it goes above that, we're going to be targeting puts at the next resistance level where there's a gap to fill right here at 461.55. So it did not top out exactly at our 458 resistance level, but it did end up having a major bull trap, which is what we were anticipating towards that major resistance at the first initial test. So what could be some ways where you could take advantage of puts? So the way I would look at it is, if it's testing our 450 level for the first time in the pre-market and it's just not crashing, go with the pre-market highs. Forget about 460. Forget about the next level. Go with the pre-market highs. If you see it retest those pre-market highs, it had a nice little drop here in the pre-market, then it retest bearish dojis, bearish candlesticks, consolidation towards the top, forming resistance, lower highs, then yeah, give it a shot. Don't wait till the 460s. That's one tip and trick I can give you. I started off my day with a small loss. I ended up buying puts right here, got caught up in this squeeze, played it safe. That could have all been prevented if I just waited or added at the pre-market highs, but I wasn't even focused on the pre-market highs. So that's one tip and trick I can give you is if it goes above our key level, look for the pre-market highs. That would be your next best level instead of using the daily chart. But the daily chart is going to be very important because that 460.155, 460.55, right, that resistance level was amazing as well, but it never tested, right? Now, what you need to understand is even though we are in a bullish market, it works until it doesn't. There's going to be days where calls just don't work and dips just don't print. And in terms of those situations, if you're having consecutive losses, 2, 3 losses in a row, going against the trend because the overall trend has been bullish and buying dips has been working, but there's going to be days where it just doesn't work. And today was basically one of those days for the most part. So for me, I stopped after my third loss. I lost 3 times in a row on call options. So I started off with puts for a small loss. Then I got back in on puts at 459.20, banked on those, made double my loss. I was up on the day. Then I kept going at it and I gave it all back with the call options. So after my third loss during the middle of the day, I called it. And I'm really glad that I called it in a sense because this was nothing but a bearish downtrend and nothing but red 30-minute candles. I don't like doing puts at the lower levels. The level that I like doing puts was at 458, 459. So if it just keeps on dropping, even though it looks bearish, I'm likely not going to be doing puts. So I'm kind of glad that I walked away because it could have been a situation where I possibly would have ended up doing calls if I were to go against the complete trend and not wait for an overall confirmation, right? So in terms of my final trade on the day, it was call options, and this was a good one. This put me back very nicely on the day. At the peak, I was down $9,000, but I made $4,000 into the close. I bought call options right here at 452.20, and then it had a nice drop to 451.55. I added extremely heavy at this drop, and then I sold into the rip right here at 452.60. That was a very nice trade. The 0-day call options went up 300%. Actually 400%. They went from 20 cents to 80 cents. If you were to buy towards the low of this at 10:47 a.m., they went up from 20 cents to 80 cents. That's insane. That's like a 3x, 300% return there. So, yeah, I think they even hit $1 during extended hours with this nice little rip right here to 454. But anyways, man, that was a great trade. The reason why I took that trade on calls was because One of our amazing levels for calls that we were very interested in was the gap. There was a gap to fill below right here at $452. This was the first time the gap filled. So my mindset is when it's going to fill the gap, this is an overreaction to the downside. They're likely going to try to spike calls. It just makes sense. Puts printed the entire day. Why would it make sense for puts to keep printing with 10 minutes on the clock, right? Just like yesterday, did the same thing. SPY was selling off and then it spiked heading into the last 10 minutes, and you can make a huge return on 0 to 8 options within those last 10 minutes. So that was the kind of mindset. Gap close reversal, it hit the gap, major support. This is where all the bears got trapped. It filled the gap right here, so it's likely going to reverse. And then just understanding, if 452 calls go out of the money, which they did, they're likely going to pump back into the money, which is why I was adding. And then in terms of timing, it's just understanding it's very likely that it's going to try to spike back. So they always try to do this at the last minute. Those are some tips and tricks I can give you. They always try to do it around 3:45, 3:50 p.m., right around that time, sometimes even 3:55 p.m. So in that zone, you're kind of just scaling in. But when it looks the ugliest and at the lowest, that tends to be the best price, which is why I added as well, because there was only 13 minutes on the clock left and it looked really fucking bearish on the 1 minute. So it just made sense for me to buy calls for an in the money spike above 452. But it wasn't only that, it was the 30-minute chart. Looking at the 30-minute chart, I figured it would try to spike back towards the highs of this candle, which was at 453.80. SPY loves spiking back to the highs of these wicks right here. This is the high of the wick, right? And then it ended up spiking back, right? That was a great play. I actually alerted that, and people made money on calls in that situation. If you go to market commentary, this was a very good commentary that I posted. At 11:30 a.m., I said we should see a spike to 458.50, and we got that spike. I posted that at 11:30 a.m. within the next hour, and 1 hour later, it hit my target exactly. And then I said the key levels for puts to short would be 459.50 to 458.50. Surely enough, 458.50 was the exact top. And the reason why I said that was the overall trend was flipping bearish. So what was likely to happen is, and I posted that at 11:30. So this right here, this is where the candle closed at 11:30, right? So this candle closed right here at 11:30 a.m., green and bullish. What do I tell you guys all the time? When it forms a trend reversal candle, when it forms a bullish candle, something like this, and if the candle before that on the 30-minute chart has a top wick, they're going to try to spike it back to the top of that wick, even on a downtrend. And if it is on a downtrend, instead of it trying to break out, it's going to try to react as a resistance, which is why I said the high of this 458.45 would be a key level for puts, because SPY's on a bearish downtrend and there's major resistance right here. This is where the bulls got trapped. So they're likely going to try to turn this previous low from the open into resistance. You see how that works? SPY's flipping bearish. You got a bearish doji on the 30-minute. That's great confirmation to try puts with that 30-minute chart, red bearish trend reversal candlestick, right? And then it sells off, and then it forms one of these high wicks, and SPY's going to try to spike back towards the high of these wicks, especially when it's sitting at some support for the first time. So it spikes back to the high of the wick, and surely enough, the high of this wick was towards that previous low, that previous support level, which is now going to react as a resistance level likely because it cracked. So they're going to try to turn this into the new roof, this into the new roof, and what a phenomenal confirmation to doing puts. For those of you who recognize that, and it was such a simple trade, but I called it after this. If I were watching, I would have entered it in this situation. But it's just understanding. This is support cracked. The trend's going bearish. It spiked back up to previous support, and it sold off again. So that means that it's turning this support into a resistance level, into the new lower high, which is bearish. That means eventually they're going to try to crack this support, right? So if you see the same bearish doji right here, it's going to crash. Look at that. Do you see the resemblance? This is why you have to understand price action in capturing trends, in capturing patterns. You can visually see this candlestick right here is identical to this candlestick right here. And what makes it even more bearish in a sense is SPY is dropping, and you can see the next 30 minutes it had a big sell-off, next 30 minutes it had a big sell-off. So simple, just wait for the 30-minute candle to close. But the previous support is selling off, reacting as a resistance, new lower highs. You got a bearish doji at the previous support right here. It's reacting as a resistance. And then the 30-minute chart says it's going to sell off next 30 minutes. And surely enough, it's sold off next 30 minutes, just like it did right here. So if you caught that pattern, congratulations, it's to you. You don't need to read books or research candlestick books and candlestick patterns. You don't need to do any of that. You just need to understand how to visually capture patterns. It's just understanding, okay, if it forms this bearish doji right here, SPY is going to drop next 30 minutes. And again, it has to be at a resistance level and ideally a level that has not been tested, right? I'm not saying it's going to go bearish if this is at a support level. I'm saying if SPY is at a very major resistance and the 30-minute closes like this, it's probably going to drop. And if SPY is on a downtrend, which it was, and it pumps back up to the previous support right here, this previous low, it's probably going to react as a resistance level, which it did right here. So if it pumps back up and forms a trend reversal bearish 30-minute right here, that previous support is likely going to react as a resistance level. In history, and the pattern repeat itself. So in that sense, you can just visually look at the chart, not even know the name of the candlestick, and you could just see what it's likely going to do if you understand how downtrends work and you understand how patterns work at resistance. So that could have been a play in terms of the strategy that I created. It's a very visual strategy where it's just understanding, you identify patterns where history is going to repeat itself. So that was the main play in that situation. Now, in terms of our game plan for tomorrow, now that I kind of recap the day, it's going to be very, very simple. So in terms of tomorrow, what you need to understand is if we're looking at the daily chart did just form a very bearish candlestick. So again, one thing you could do is you can see how SPY reacts on the daily chart when it tests a major resistance level for the first time, and if it forms this exact candlestick. Make sure you're always doing that. Take notes of this, right? So in terms of, that's one thing I would recommend for you to do. You could see it did it right here. It was at major resistance at the time, and then it sold off, and then it pumped back green. So that could be one possibility. I'm not going to let that blindly bias me though, but I will use that information in a sense to buy oversold dips. You could see the same candlestick kind of formed right here. It dipped, and then it ripped back up. So basically what I'm leaning towards with this whole situation right now is to focus on a oversold dip. I'm going to be focusing on an oversold trend reversal dip. So I'm going to be looking and identifying pre-market lows to figure that number out. And I'm also going to be going with our key support levels that have not been tested yet. So ideally, I would like a lower level. One of the levels that I will be eyeing for calls, 450. $450, nice keyhole round number. That's a great level for calls. I also like 48.50. I don't think it's going to be a massive red day in a sense. It's either going to try to close in the middle or close bullish. So I will be looking at oversold dip buying opportunities in that sense. So the key levels that I will be watching for tomorrow, $450, 448.50, and the last one I will say, I really couldn't see it going lower than this, but anything's possible. Our last one's going to be 447.50. That's going to be the last support level that we buy. Now, in terms of put options, there will likely be some good opportunities for puts as well. It's best to focus on levels that were not tested. So take a look at this crazy pattern. You could save this for the future. It's probably not going to hit tomorrow, but this will be a great future level to try puts. See how when SPY spiked back to the low of this candle and it's sold off. So when SPY spikes back to the low of this candle, which is 458.15, it's likely going to sell off again. So puts at 458 likely for next week. Keep an eye on that. In terms of right now, it's a little bit tough. So we're towards the lower end of the channel, which is why I'm kind of swaying away from puts, even though there is going to be some good puts opportunities. So it's a little bit tough, but just save that level for the future and wait to trade the best setups of his prices, because puts at 458 should do extremely well. Key levels to keep an eye on are going to be 452.50 support. That's going to be a key level. But I really don't have much other than that. You can keep an eye on as well 455.50. So in terms of just a quick price action ladder to break things down for you, 458 is our new best level for puts. It's probably going to take till next week to hit. 456 to 455.50 is like make or break in the middle. It's going to try to react as a resistance, right? This could be a key level for puts as well, 457. That would be a very nice level for puts. If it were to go to 457 tomorrow, that should be a phenomenal level for puts, but keep an eye on 456. 456 could be another good level for puts. Now, in terms of calls, levels that have not been tested, 450, 448.50, 447.50. So right now we're towards the more bottom of the channel. It's trying to have a little reversal in terms of extended hours. Not too interested in that level, but I will be keeping an eye on the pre-market lows as well. So that's the overall game plan. As you can see, we're having a small gap up, nothing too crazy right now. But that's my thoughts. That's my analysis. In terms of tomorrow's close, it's either going to close in the middle or it's going to close strong, in my opinion. I don't see a massive red day. I could see something where we drop, but that nice drop that will likely get towards morning to midday will end up being a middle recovery or a bullish recovery. Those are my thoughts and analysis looking at the daily chart. You can go back and study the daily chart based off the information that I gave you as well. So those are my thoughts, guys. That's what I think. If you want to be a part of Traders Society, it's going to be the first link down below in the description. It's a one-time fee and it's lifetime access. We're going to be closing the program starting end of July. So if you do want to join before we close the program and before we raise the prices, it is the best time to join. It's the first link down below in the description. I will see you guys heading into the market open tomorrow.